Hello folks, this is Jimmy Nelson from Nelson Financial with an educational economic update for June 2018. In this month's video, I'll discuss some of the major headlines that influenced markets in May. I'll also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. Geopolitical headlines continued to affect markets in May as investors tracked a number of scenarios. For example, the back and forth over the scheduling of the historic U.S.-North Korea summit affected stock performance as investors tried to determine whether it would actually happen. Investors also watched as trade tension between the U.S. and China amplified, with each country threatening tariffs on the other. The tension then calmed as the countries released a joint statement saying they would work to substantially reduce the United States trade deficit in goods with China. The month ended with more trade-related tension. On May 31st, the Trump administration announced that at midnight, U.S. tariffs would start on aluminum and steel from Mexico, Canada, and the European Union. In reaction, the Dow dropped more than 250 points that day. Despite the backdrop of political fluctuations, all three major U.S. indexes ended the month in positive territory. The S&P 500 gained 2.2%, the Dow added 1.1%, and the NASDAQ leapt forward 5.3%. As the month came to a close, we received a number of reports that indicated the economy continues to grow. In particular, the latest data shows that consumer spending jumped more in April than analysts had expected. Inflation also hit the Federal Reserve's target level for the second month in a row. Examined together, these two details led economists to increase their forecasts for the economy's growth in the second quarter. And speaking of economic growth, we received revised data for first quarter gross domestic product, which increased slightly less than originally estimated. The change came largely from decreased business inventories. But rather than being negative, this data creates greater opportunity for increased production in future quarters. In fact, some estimates indicate that second quarter GDP growth could be 4% or higher. In other words, if you look beyond the headlines, you will find data indicating that the economy continues to strengthen. Global events are affecting markets, but our economy keeps expanding during any tensions. During June and beyond, we will continue to analyze the data to see what may lie ahead. That's it for this month's Educational Economic Update. Once again, this is Jimmy Nelson with Nelson Financial, signing off for the month of June 2018. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 863-676-7995. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or product to protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results.